Hello, my friends. Let's go to the question of the day. Why do high returns almost always hide risk? Hello, my friends. I'm Fred. Here we talk about investments, real life business, and training. And yes, and I wouldn't say almost always, I would say always. Every time that you are investing in something that is paying you a high return, uh, um, a high risk is involved too. There is no other way. Think about that. For example, here in Brazil, for people who invest in indexes and in what the taxes that the government pays you, the the amount of interest that they pay you here in Brazil is much higher than that they pay you in United States, for example. And why is that? Simply because Brazilian government are much more risky than United States. Brazil as a country, for you to to invest here involves much more risk than investing in United States. So they need to pay you much more. We Brazilian people, we invest here because as we are born here, we believe that we know all the risks. We believe that we know the country, that Brazil is never going to change. You know, for example, we are used to our country being not developed, and we are able to survive, to get by, to build our lives here. But this doesn't mean that if an American, for example, looks at our country in a with an eye of someone who wants to invest, it doesn't mean that he or she will think that this is a good place for you to invest. We that are Brazilian, we who have born here, we are used to the environment here. For example, in my case, I invest mainly in real estate. I build I built small warehouses to rent here in Brazil, uh, in my city and in the capital of the state that is near my city. All right. For me, I tend to think that is a safe investment because I live here my entire life. I I I am accustomed to the city, to the place, to the ups and downs of our economy here, to the exchange of government and how the economy many times is bad. Actually, I need to recognize that after this last um, money that we established here, the real, after the government Fernando Henrique Cardoso that created the real, our economy is much more stable. All right, I can give them that, but it's not. It's far away from the kind of stability that an American citizen it's used to in the US market. It's far, far away. The kind of stability that we have here has nothing to do. with the kind of stability that an American is used to. So that's why it pays more. So here the environment is riskier. I don't even know if there is this word riskier. Involves more risk. That's what I'm trying to say here. The environment here in Brazil involves more risk. What I've been trying to do, I have these investments in real estate, the warehouses that I build myself. And what I try to do, along with those investments, I'm trying to invest in ETFs because then I'm exposed to the market, especially the American market, and exposed to lots of companies, the 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 most important companies maybe of the world, and I'm trying to follow the index. Not trying to. I'm following the index because I'm buying the index by buying the ETFs. So I'm trying to do that. And actually, um, I believe that this is the safer strategy for someone to invest nowadays. Much safer than buying individual stocks. But this is the thing that you need to think. For example, when you buy an individual stock, and if it is going up very quickly, this doesn't mean that that stock is not going down in the next month, in the next year. That's why you should diversify and buy the index through ETFs, because there are always risk involved. And the main thing that I want you guys to understand is this: it's very difficult to be someone that is going to be so smart that is going to be able to beat the market. If you look at the data that we have referring to this, almost nobody can beat the market. Especially if you take a span of time for example, more than 10 years. If you take 20 years or something like that, then almost no one beats the market. That's why buying ETFs is the safer way to do it. Because people they think about this the wrong way. They believe that the tax is the most important part. But the reality is this: the most important part of investing is time. The longer you invest, more you are going to get. So the most important part is time. The second most important, the amount that you invest per month. Someone who invests 1,000 will be much more successful than someone who invests 100. You can't compare. But what people do most of times, especially here in Brazil, I don't know exactly how people act in the United States, but here in Brazil, what people do many times is this: they want to get the return tax of 1,000 investing 100, and you can't do it. Simple as that, you know. So high tax return involves high risk, and you should protect your capital the better you can. For example, when I was explaining for you that I live in Brazil and I invest in real estate here and everything, Yes, we are used to the place. So, in general, you know what to do. But I understand that for an American, he may look he may look to what I'm doing here, and he may say something to me like, "Oh, Fred, are you crazy? Why don't you move to the United States or something with the capital that you already own?" Would be possible for me, but in reality, I can't do that because I live. I have two daughters here in Brazil, and I wouldn't like to take them away from their mother. I want them to be close to their mother and close to me. And they are 11 and 13 years old, and uh, I prefer to stay here. And actually, to live here, if you know what you are doing, and if you make a reasonable amount of money, it's a good place to live. All right, my friends. Let me know in the comments what you think about this subject. And thank you for everyone who is subscribing. I'm struggling a little with the English, but I believe that with time I'll be more comfortable to filming videos in English for you. All right, take care and thanks for everyone who is watching.